Okay, so today we're going to do something a little different. We're going to grab our stethoscopes and put on our lab coats for a full technical checkup on JOBY Aviation. The stock had a really rough day, so we're diving into what a professional analyst report has to say to understand its health and, what could possibly happen next.
And yeah, here's our patient's main problem. A drop of over 16% in a single day. I mean, wow. A move like that is a huge symptom. And our job now is to figure out the underlying cause. What in the world is going on with JOB?
So, that really is the big question, isn't it? Think of this whole thing as a diagnostic workup. We're going to look at the charts, we're going to check the vitals, measure the momentum, and really try to see if this is a sign of some long-term illness or maybe just a short-term shock that it could recover from pretty quickly.
All right, first things first. Before you can diagnose anything, you have to look at the patient's history, right? We need to put this one really bad day into the bigger picture of its overall performance chart.
And this slide right here gives us some much-needed perspective. So the stock started out under $5, then it just rocketed past 20, and now it's fallen all the way back to around 11. So yeah, today's drop was brutal, but you gotta see the bigger picture. It's still double its low for the year, but it's also lost almost half of its value from the peak.
Okay, so with the history reviewed, it's time to check the vital signs. This is where we look at the core health indicators that tell us about the stock's long-term health, and, maybe more importantly, which way it's been trending. And the main tool for this job is the moving average. You can think of it like taking a patient's average temperature over, say, a few weeks, instead of just one single reading. It smooths out all the daily up and down noise so we can see the real underlying trend. Is the patient actually getting better, or are they getting worse? And the results are in. As you can see on this chart, the current price is way below both its medium-term and long-term averages. Whenever a stock's price falls below these key trend lines, it's a huge red flag for analysts. It tells them the long-term health trend has turned negative, or what they call bearish.
And it's not just one test saying this. This diagnosis gets confirmed by a bunch of other specialized tests. For instance, one indicator is basically just flashing a big bright sell signal. Another one that measures the strength of a downtrend, it's completely maxed out at 100. So the takeaway here is pretty clear. All the vital signs are pointing in the same, very negative direction.
Okay, so we know the long-term trend is not good, but now we need to measure the intensity of this recent collapse. We've got to check the patient's energy levels. How exhausted is all this selling pressure right now? And believe me, this is where the story starts to get really interesting.
This just shows you the pure force of that drop. Bollinger Bands are kind of like statistical guardrails for a stock's price. The fact that JOB's price crashed completely through the lower guardrail means this wasn't just some sell-off. It was an extreme, statistically wild event. The patient has been pushed way past its normal limits.
And that kind of crazy move brings us to this super important concept, oversold. It's a technical term for when the selling has been so aggressive, so relentless, that the stock's price gets pushed down to a level that's just unnaturally low. It's like a patient who's so exhausted they can barely even move.
And just look at these test results. We have multiple different gauges here that measure momentum, and they are all deep in the red, well into oversold territory. I mean, one of them is literally at 0. You cannot get any lower than that. The data is screaming at us. The selling pressure on this stock looks completely and utterly spent.
And this number? This just confirms the sheer panic. On the day of that big drop, the trading volume was nearly 7 times its daily average. This wasn't a slow drift downward. This was a stampede for the exits. And that is exactly what causes those deeply oversold conditions we just saw.
So let's recap. We've looked at the patient's history, we've checked the vital signs, and we've measured the exhaustion levels. Now it's time to put all of these conflicting signals together and deliver the analyst's final diagnosis.
And here it is. This single sentence from the report just perfectly captures the entire story. On one hand, the long-term trend is, without a doubt, strong, bearish, but on the other hand, the stock is suffering from extreme oversold conditions. So it's sick, but it's also been pushed to its absolute breaking point.
This is the fundamental conflict right here. The sickness is definitely real. The price is below all its key health indicators, which signals a clear downtrend. But at the exact same time, we're seeing these little signs of a potential recovery. The selling has been so over the top that a bounce, even a small temporary one, becomes pretty likely. The patient is very ill, but maybe, just maybe, the fever has finally broken.
So what's the treatment plan from here?
Well, first, analysts are going to watch. They need to see if the price can hold up above that key support level of 1083. Second, they're going to look for a short-term bounce, what they call a relief rally, basically just because of how ridiculously oversold it is. But third, and this is the most important part, they're going to be cautious. The long-term diagnosis doesn't change one bit until the price can fight its way back above that critical 1314 level.
And that leaves us with the ultimate question that this whole analysis has been building up to. Is JOBY a falling knife that you absolutely do not want to try and catch? Or after being pushed down this hard, is it actually a coiled spring just getting ready to snap back? The technicals give us both sides of that story, and now, well, the market gets to write the ending.